You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.
Welcome back for another episode of The Builder's Mindset. The idea for today's topic came up because I have a lot of friends who are not in the home building construction industry, but interesting, almost everybody lives in some form of housing, right? And so that makes most of the people that I know who are not in the industry, some of them think they're experts. Some of them are clearly know that they're not experts, but they're all impacted, and many of them are very curious about it. And a lot of them have opinions. They're making decisions or feel like they need to make decisions around things related to housing. And sometimes I hear them, and sometimes I just can't help myself but get involved and offer them my perspective. So I thought I would do that here on the episode because I really enjoy talking about all things home building, supply, demand, demographics, interest rates, you name it. And you know, those of us who are in the industry, a lot of us have an opportunity to get a lot of data. We've got, Zonda and Burns and a whole multitude of folks that do phenomenal work on putting out great data about what's happened in the past. And they do a great job of trying to forecast the future. And I think that I like talking to the folks who don't really either have that at their fingertips or don't have the opportunity or the time to have that available to them. I know I talk with countless trade partners all the time, local trade partners. And for the most part, I would say the vast majority of the trade partner world, and talking about total number of people, total number of businesses, are local. We hear it a lot, local, and so they're not like, you've got your big companies out there like Masco's not around anymore, but Masco's from the day. I just dated myself a little bit, but you've got your Top Build as a national insulation company that also does some other things like blinds and gutters. You've got IBP, who, same thing, they do blinds, gutters, insulation, and some other stuff. You've got suppliers that have large brands, and like the suppliers tend to be pretty national in the most perspective of things, your Sherwin-Williams, etc. But for the most part, the framers, the concrete foundation companies, the electricians, the plumbers, the trim carpenters, the roofers, most of them operate in one market, maybe two, definitely one region. There are some exceptions to folks who've gotten larger and are in multiple markets. But a lot of these folks don't have the time or the resources or the access to be able to look and go to an economic outlook or forecast or whatnot. And a lot of them don't have time to listen to earnings reports. And that's why one of the main reasons I put together the earnings report summary, which we're working on now. And I'll tie that in a little bit because Lennar just reported about a week and a half ago. They don't have time for it. They're busy running their businesses, scheduling, crews to go to the job sites to build houses. And so it's very localized. It's not private equity run backed companies. And I talk to these folks, and they often sometimes it's business, like want to understand what I think is going to happen in the market. Locally, typically too, right? Like at the end of the day, they know it ties in nationally. But that stucco company who has a location that just services Southern California, I mean, at the end of the day, if Southern California booms and Tucson is struggling, that's kind of a really weird nuance, but it usually doesn't work like that. So I tend to try to give them a national flavor for like why I think the opinion I give them is what it is. And so, and then sometimes it's just friends of mine, that are not in the industry. I was talking to a guy I was out running with today, and I forget exactly what he was trying to decide on doing, if it was a job change or if it was a refinance or if it was he's like, I remember saying like, I just don't know. I don't feel good about them. Not that great about the market. And I'm worried about that, or I don't know what's going to happen. And I said, hold on. So that's kind of like where I wanted to dive in a little bit for everybody and just look, this is my layperson opinion. There's a little bit of like, I've been through, you're in the home building industry for 20, 30, 40 years, you start to see patterns and trends and things. And, look, as good as the data folks are about taking past history and extrapolating to the future, they're not always right either. So I might not be right, but this is some of the stuff that I shared with my friends. So first off, back to the beginning part of what we talked about is that for the most part, housing is something that everybody needs. I was recently looking up the number of the homeless percentage in the in relation to the greater population, and homelessness is a problem that we really need to work on and to struggle, and we're struggling to get corrected and get fixed and figure out. And that's a topic for a whole other day that somebody really put me in perspective of like why that's so difficult to solve. But if you're in a market like San Francisco, Southern California, or Phoenix or New York, like the larger metropolitan areas where you generally have nice weather, you're gonna feel like homelessness is a higher percentage than it really actually is. But I bring that up from the perspective that, short of that part of the population, everybody for the most part needs a place to live. I mean, it's Maslow's hierarchy of needs, right? It's like one of the first ones. It's up the top there. We need shelter. And so that shelter can be everything from a really nice, large, single-family home on a large lot in Texas, Colorado, you name it, wherever, all the way down to, we've heard the joke, living in mom's basement, right? So if you're whatever age, and you're living in mom's, that's still shelter, right? And like, that's the shelter that you have. So what I say is like, there is an inherent demand for shelter. It's almost like it's inelastic in terms of like the amount. Like, most people need housing. They need shelter. Now, how they achieve that, we used to talk about, we took microeconomics. If any of you took it like in high school, they used to talk about like, they used to say like milk, like, because everybody drank milk, right? Like, and that's changed now because there's so many different, like, lactose intolerant, I drink oat, I drink this, I drink that, or whatever. But I remember they used to, like, in the microeconomics course that I took in high school, I remember them talking about milk as being, it's inelastic in its demand. What do you mean? Well, like, everybody drinks milk, so like, doesn't matter, kind of like, and it's less impacted. The demand on milk is less impacted by its price fluctuations. You could kind of argue that about gas, right? So, but housing is as well, but there's the unique thing about housing. What did I say? You can live everywhere from a very high, large home on a single family home on a large lot. You can live in mom's basement. If you're living in mom and dad's basement, that's still shelter and housing for you. And so you have, even though you inherently have a demand for housing, there are things that you can flex. And just imagine, between that high-end custom home, 5,000 square foot home of a good friend of mine just showed me his house. He moved to Tennessee, and he showed me this house, and it's like a 4,500 square foot house on a third of an acre in Tennessee that he got for under $1 million. It's gorgeous. And I'm like, geez, I should get the heck out of California. But you have everything from that all the way to living in mom's basement or in mom's spare room, or like the room before you left to go to college, or whatever that may be. And then everything in between. Now, that inherent demand will also adjust what you'll settle for, but what you'll settle for will also adjust based on where you're at in your life, right? We're human beings. Here's another thing. Most people eventually find a partner and make a family. Not everybody, but most. Statistically, I think I'm pretty safe in saying that. And if you find a partner and you're going to make a family, living in mom's basement is getting really tough, right? Okay. If you have a partner, are starting a family, you have one, you live in a condo, you got another one on the way, and you find out that other one on the way is going to be twins, and you're in a 2-bedroom. I mean, now, whoa, like you're in where your inherent demand is going to get pushed or moved to in terms of what you feel that you need versus want is going to shift around as it relates to that. Now, what does that mean as it relates to just overall housing economy? I think where a lot of people are right now in terms of feeling nervous about things is interest rates. And this is great. We are going through what I would consider to be a great experiment as it relates to demand and interest rates, right? Because let's go back to the inherent demand and the flexibility, right? When we watched prices rise and interest rates go up to 7%, they hit 7% in October 2022. When we watched that happen, I personally watched buyers adjust and give up things that they wanted, not in exchange for. When interest rates were 2.5%, 3.5%, they could afford things that they wanted but didn't need. And as the interest rates went up and prices went up, and affordability, you hear that term a lot, as affordability started to get tighter, they started to make concessions. One of the examples would be we started selling more 4-bedroom homes over the 5-bedroom home. The bigger floor plans started to stay on market a little bit longer. Why? Because they're more expensive and less people could afford them. And a lot of people were buying 5 bedrooms because they wanted them, not because they needed them. There's that kind of that sort of trade-off there, right? If you have a family, you and your partner, let's say, and you have we'll give that example. One kid, find out you're pregnant and you got twins coming, and now you're going to have 3, and you ultimately would like to have a bedroom for all of your kids. That in and of itself is a want as well too, and not a need, right? Go back to all the 3-bedroom, 1-bath houses, that were built after World War II. But if you're like, hey, we're going to go and we're in that condo, and we're going to go buy a house. Well, a 4-bedroom house in that case would meet that need. Okay. But if you're like, I don't know, let's just say hypothetically, we're going on the same thing. Let's just say your first child's a boy, you find out you got twin boys coming, and you want a girl. So you're going to have a 4th kid. You're like, well, hey, let's go buy a 5-bedroom house. So like if we settle down and we like that place, we stick around there, and the other one comes along, we have that other bedroom. And in the meantime, we can use it as a home office because we're remote work, whatever. And you can do that, but it's not a need. It's still a want. And if you can afford the want, you'll get the want. But as interest rates go up, pricing goes up, affordability comes down. We started to see a lot of people buy the smaller homes, the 4-bedroom homes. In California, we have this thing with solar. So most builders in California do their solar, it's called a lease. So when you buy the house, it's not in the purchase price of the house, it's a lease program. And so you pay an additional monthly fee to the company who manages the solar, and it doesn't impact your debt to income numbers. And so it doesn't have an impact. Well, when interest rates were 3%, that $20,000 solar system was cheap, easy money. People didn't want the lease or the hassle of the lease, so they'd buy it, put it on a 30-year mortgage, and call it a day. We also watched people start the number of leases for solar start to go up because of affordability. Once again, like I said, when you put that $20,000 solar system on the $450,000 house and it's now $470,000, that impacts your debt to income ratio. If you're leasing it, it doesn't. The way the mortgage rules, at least in the state of California, work, it doesn't impact that because it offsets some of your utility costs, so they don't have to factor it in. But when it goes onto the purchase price of the home, it does. And so we watched people start to do more solar leasing because they had to. They wanted to buy the solar. They didn't want to lease it. They wanted to buy it, but they no longer could afford to. So now the need for the home took over. It's like, well, we'll lease it. So those are some of the examples we saw where along that spectrum, people will make adjustments, trade-offs, or tweak certain things so that they can get something that they need. Case in point, if you're going to move out of mom and dad's basement, let's say you're in mom and dad's basement because you're saving money because you want to get a down payment, because you want to go buy that 4-bedroom house, because you already have a fiance and you're going to move in together. You know you're going to start a family and you want to live and put roots down somewhere. And all of a sudden, you know, the interest rates do what they do in this window of time. And now you can only afford a 3-bedroom house. Most people will buy the 3-bedroom house. They won't stay in mom and dad's basement because they can't afford a 4-bedroom. They'll buy the 3-bedroom. And a lot of people will still buy the townhome or the condo because they're starting a family and they want to have a place of their own. That's just the modern family, right? And so when we look at the demand from that perspective and the demographics, the inherent demand is there from the aspect, I believe right now that the oldest Gen Z are, oh God, don't quote me on this, but I want to say they're 26, 27, 28, maybe even 28. They're kind of like, they're really entering into prime home buying age now, okay? And there's still a ton of millennials that need to move up. Their families are growing and getting bigger. So in my opinion, the inherent demand is there for housing. So what I was telling this particular individual when he was kind of nervous, I said, look, we're going through some unprecedented experiments right now, right? So let's go back. We'll start with the interest rates. Interest rates have been 6.5% to 7% for the past 2 years, right? Builders are still selling houses. Why? Well, most of the large builders are buying down the interest rate with future commitments and other things to about 5%, let's call it. Some are a little lower, some a little higher, but like, and I believe John Burns put something out this year where they showed like that 5 to 5.5% is sort of that sweet spot of like the threshold of when people will like, I'll buy that, you know, I'll buy at that rate. Funny thing, this friend I was talking to has an interest rate at 7 1/8. Okay, so doesn't mean they won't buy if it's over 5.5%, but like more people can, will, and are able to buy at the lower interest rates because of the affordability dynamics. And so builders have been getting around that. So that reinforces, in my opinion, the demand that's there. It shows the demand is there. Does the demand go down if we get up to 7%? Yes, it does, because who's struggling right now more than others? Right now, the smaller builders are struggling over the larger builders. Case in point, 2023, what happened? First time in recorded history, the public home builders accounted for over 50% of the new home closings in the year of 2023. First time, okay? These are the big guys. They can afford to pay $25,000, $30,000, $35,000, $40,000, $45,000, $50,000 to push down the interest rate with future commitments in other ways to get you into a home at 5.5%, as opposed to the going rate of 7 1/8. Like my friend who bought that house, it was an existing home. And that's a whole other thing. So the existing home market is going to continue to struggle relative to the new home, the large new home, because if I'm Joe Smith and I'm selling my house, I don't have $40,000 or want to give up $40,000 to help buy down, you know, the buyer's interest rate. But if I'm Pulte, Lennar, Taylor Morrison, D.R. Horton, Meritage, NVR, to keep my production going in my machine, for me, I'm not just trying to work through inventory. I'm trying to keep my land assets moving. I'm trying to keep that production going. And oh, by the way, the inherent demand is there. So it now becomes a cost of doing business for them. And it has been for the better part of 2 years. And so the smaller builders, I think, are really the ones who are struggling with this to be competitive because they can't do the same level of buy downs that the large guys can. But to me, it proves that the demand is there, as I've been talking about. People can buy houses, and if we can help them with their monthly payments and their affordability, we can get them to purchase homes. And so the other thing, so there's the experiment for me, is like, okay, interest rates are 7%. we could still sell homes at 7%. My buddy bought one. It's less likely, but at 5 to 5.5%, we'll be fine. And that's where the builders are getting it to. So the other thing, because he was, talking about his concerns and everything, and this is the problem I think a lot of people miss, is, well, I'm waiting for interest rates to come down. And I'm like, yeah, but the Fed's, and they're like, oh, the Fed might lower rates. I'm like, yeah. Fed's lowered rate a couple times in the last few months, right? But rates haven't come down. The rates are tied to so many other different things. The strong economy, the inflation, the bond yields, all of this have got us where I think the optimistic view that you hear from the pundits is like, we don't see interest rates getting below 5.5 for the foreseeable future. And my response to them is typically like, and when do you even see that? Like, when do you see them getting to 5.5? I mean, they're like been over 6.5 for some time. I don't see interest rates going below 6.5 for the foreseeable future. So you've got that. People are waiting for something that's probably not going to happen. And then you probably got a little disappointment when it doesn't happen. And then, lo and behold, Lennar just reported, and they got hammered again because they missed their sales expectations, but they did promise they'll get back on track with it. And I believe they will, because they will keep the machine going. But they essentially, they report, because they closed the year out November 30th, and now we're waiting for all the rest of the builders close. So 29th, 30th. Tuesday is the last day for a lot of the public builders. And so the data is going to start coming in over the next 2 to 3 weeks, 4 weeks. But I think what you're going to see is what I explained to them is I said, look, we had a very large election just happen. Large in general because there's a presidential once every 4 years. But beyond that, I could make the argument that culturally speaking, this was one of the biggest elections that I think I'll see in my lifetime. I truly believe that. And I think that had a lot of people on both sides of the aisle, both sides of the fence, kind of saying, whew, let's see how this all shakes out. Now, the best thing that could have happened with the election is that it was over quickly. I truly believe that, and I'm happy to talk to anybody about politics offline if you're willing to be civil about it. But what I will say, and I went into this saying, it just needs to be decided quickly so that we don't run through this pain and chaos. And I think we have. The trouble with that from a numbers reporting, from a home building perspective, is that since it happens in November and it was over quickly, November we're already pushing into the middle of the fourth quarter. And if you're Lennar, and here's what's going to be interesting. You can watch 2 metrics I want everybody to watch, or 3 really. So Lennar finishes the end of November. So essentially their whole fourth quarter, and they said I think they missed their sales goal nationally by about 2,000 homes for the quarter. Typically in a quarter that's lower anyway because of holidays and year end coming up. But the election adds on top of that. And the vast majority of the time, like over 2 months of that quarter for them, was leading up to this massive cultural election. Okay. So I think that hammered them a little bit more because people were more nervous. People are more reluctant. Inherent demand is there, but they're still a little nervous, want to see how things play out, right? Because if the country's going to go to hell in a handbasket, well, shoot, I better not buy a new home right now, right? So now, all of the other builders who report at the end of the fiscal year, like the year we all know, December 31st, they still had all of October, and then it's not all of a sudden like the election's over, let's go buy a home. I would make the argument that the most of October and November for most of those people, those other builders and people in general, are still like, okay, the election was decided really quickly, whether my guy won or my woman didn't win, whatever the case may be. If I needed to buy a home because I was in that inherent demand group that you talked about, then I'm not just walking out on December 5th or 6th, whatever it is, and I'm going to go buy a home. We now have Thanksgiving coming up, and then we have Christmas, Hanukkah, holidays, New Year, taxes, you name it. And so it's typically the slower time of year anyway. We're well out of the selling season. So everybody's like, oh, so that means like next year, Mike? And I go, well, so what I would say is watch this. Here's some of the things I would tell you to watch is, number one, if the other builders miss percent-wise a little less than Lennar, then that would add a little bit of validity to what I am saying, in the sense, because they had less of their quarter was kind of in that portion of that hype, but not in a major way. But if they're in the same bucket percent miss as Lennar in sales, or not as bad, I think that's a good thing. If they're worse, that's a bad thing. Now we got to get through to the next year. So that's the second thing to watch for, is watch the uptick in traffic and sales as we roll into January and February. We typically talk in this industry about, like, the selling season really kicks off with Super Bowl Sunday. But we've had years, and if you go back to, I want to say it was January of 2023, and we've talked about this, that January was better than anybody expected. So watch the January sales. And what I would say on that is if they're not great, but they're typical, don't worry yet. Don't panic. If they're great, the inherent demand is coming out and people are said, I'm tired of waiting, okay? Because remember, a 3-bedroom house is better than mom's basement, okay? So in January sales, are they normal or better than normal? Okay, if they're normal, just be patient. Then let's get through Super Bowl Sunday, third one. Let's get through Super Bowl Sunday, and let's really see what the sales look like in traffic after that. And then let's really look at March, okay? Because that's when things really kick in. And so what I've always told people is, look, if January is not great, it's to be expected. If February is not great, all right, but don't panic. If March is not great, maybe we might want to sort of worry. And I want to put air quotes around that word, because what I told my friend was this. I said, look, if it would make you feel better to, like, have something tangible to feel good about, I said, then wait to see what January sales are. If they're good, go forward. If February is good, go forward. I said, and if March is good, go forward. And I said, look, in the worst case, even if March isn't great, the inherent demand is there, in my opinion. We don't have the subprime crisis like we did. We have people locked into houses with low interest rates that they're not going to walk away from. That's actually hindering, because if I need to sell an existing home to buy a new home, that's one of the kind of the bottlenecks. Like, the interest rates on the existing homes are helping new home sales, in my opinion, but they're also kind of hindering them a little bit, because if I need to sell that home because I got to get the cash out to buy, but as I told my friend, listen, even if March isn't like phenomenal, let's not, panic. Okay. Inherent demand for housing in this country is there, where at least, by who, depending on who you talk to, 1.5 million units under supplied. And that will carry us, in my opinion, for several years of accelerated growth. So be patient, do the wants and needs checks and balances, and everything is going to be okay. All right. So there you have it. That's my little take on demographics, supply and demand, and housing and the economy on the housing side of things. And I hope you enjoyed this episode. Sorry, it's a little long, but have a great day, and we'll see you, talk to you, hear from you next week.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.